Today we are going to see about the accounting equation. Let's start. The accounting equation states that a company's total assets are equal to the sum of its liabilities and its shareholders' equity. The straightforward relationship between assets and liabilities and equity is considered to be the foundation of double entry system. In this itself we got to know that is accounting equation comes under like assets, liabilities, then capital. Then it is the foundation of a double entry system also. It would be helping for double entry system also. It is a straightforward. We can get to know how much is the assets, and by adding liabilities plus capital, how much would be there. And we can prove that LHS is equal to RHS also. The formula for accounting equation is assets is equal to liabilities plus capital. The assets, while adding the assets value would be the same, while adding the liabilities plus capital we would be getting the asset value, that is LHS is equal to RHS. There is another formula also, that is liabilities is equal to assets minus capital. When we don't have the asset liabilities, that time we have to find the liability by assets minus capital. Suppose there is no capital amount found, this is a formula, that is capital is equal to assets minus liabilities. Now we'll get to know about the what is the meaning of assets. Assets represent the value resource controlled by the company, and assets is anything of value or a source of value that can be converted into cash. That will be individual, companies, and government own assets. For a company, and assets might generate revenue, or a company might benefit in some way from owning or using the assets. For example, that is cash, account receivable, buildings, plant and equipments, goodwill, and patents. For suppose there is a company called ABC Limited. They are producing some kind of goods and services. For manufacturing it, they need a machinery, and for the transportation they need a van or other transportation things. Then for storing it they need a building. These are called assets. These are assets of the ABC company. Now we will see what is the meaning of liabilities. The liabilities represent their obligation. Both liabilities and shareholders equity represent how the assets of a company are financed. Financing through debt showing as liability, while company has, whether it's bank loan, mortgage, unpaid bills, or any other sum of money that you can own someone else. We saw that how the asset came. For example, like liability, for liabilities, that is for owning a machinery, the ABC company had took a bank loan for purchasing the machinery, or they have to buy goods and services, raw materials for goods and services. They have took the creditors from other some person, that would be B. From B they have took the uh, cre- they have took the goods on credit, that is also called as, that also comes under liability. And they have took for some they have took amount for the developing their creditors. They have they have took amount for developing their business from the creditor, that is that also comes under liability. These are the items comes under liabilities. This would be coming under this would be coming under liabilities. Now we will know about what do you mean by capital. Capital can be defined as a being the residual interest in the assets of a company after deducting all its liabilities. That is what would be left if the business sold all its liabilities. In case of limited liability company, capital would be referred to be as liabilities. For example, if PMC Limited have invested for while commencing the business, they have invested 1 lakh rupee on the business that would become a capital for the PMC Limited. We saw what is the meaning of assets, liabilities and capital. Now let's solve the problem. Anshika began a sole trade business on 1st January 2001. During the first month of trading, the following transaction would be placed. She started the business with 5,000 of cash. While starting the business, she started with the amount of 5,000 rupees. Then she took out a loan from the bank of rupees 10,000 for developing her business. She took a loan from the bank that amount is 10,000 rupees. She purchased a van of for 12,000 on cash. She has purchased a van for transportation of her business, that is 12,000, and she have gave the cash also. She purchased 100 units of inventors on credit at a total cost of 2,500. That is 25 rupees per unit. If you multiply, that is 20. One product one inventor is 25 rupees. Then for 100 inventors, that is 25 rupees, 2,500. The amount is 2,500. Then she sold 10 units of inventors to a customer on credit for a total of 400, that is 40 per unit. 1 unit of inventory is 40 rupees, and then for 10 units how much would be, that is 400. For transportation purpose, they have already paid the 2,500. They are already paid 250 for the transportation. 250 for the transportation. So we have to deduct it. 400 minus 250, that is 400 minus 250, that is 150. She paid interest on loan of rupees 60 rupees. For in the interest of loan is 60 rupees that she has paid. So that was not the pending. She has paid all. She's paid, and she repaid 250 of the loan. From the 10,000 rupees of amount, she had paid 250 of the loan. Then she took 10 rupees from the business bank account to cover a personal expenses. For her personal expenses, she has took 10 rupees. That would be we have to write in the transaction for drawings account, because while it comes under drawings account, it comes under personal account. That would be drawings. It is for business purpose, it would be for withdrawal. This is the format for accounting equation. In the question we saw that she have started the business with 5,000 of cash. So the transaction for in it would be business started, that is 5,000, and she have invested, as I've said, that whatever she have invested in her business, it would be considered as capital. So that is 5,000. The total would be 5,000. There is no liability, so we have to take at 0. The next transaction is she took out a loan from the bank of rupees 10,000 for developing her business. She have took the loan. The transaction would be loan from bank, that is 10,000. It is a liability. While taking a loan, it is a liability, so it is considered as we have to write in liability side, that is 10,000. That is, while adding it, we are getting 5,000 plus 10,000, it is 15,000. Then while adding both, that is 10,000, that is liabilities, plus capital, that is 5,000, we are getting 15,000. Then the next transaction is she purchased a van for 12,000 cash. She has purchased a van for 12,000 cash. That would be purchased a van on cash, that is 12,000, because she has paid the cash. It's not in the liabilities. It's an it is not it doesn't come under liabilities, so we have to deduct this amount. So we are deducting this amount. While after deducting, we would be getting it as 15,000, 10,000, then 5,000. The next transaction is she purchased 100 units of inventors on credit at a total cost of rupees 2,500. 2,500 she has purchased inventors on credit. So 2,500 on credit, it comes under liabilities, so we have to write in liability side, that is 2,500. And the amount would be 15,000 plus 2,500, that is 17,500. Then 10,000 plus 2,500, it is 12,500. Liabilities is 12,500 plus the capital is 5,000. If we add, we are getting 17,500. The next transaction for that is she sold 10 units of inventors to a customer on credit for a total of rupees 400. For the transportation, we have deducted 250. After deducting, we got 150. We have to take that 150 only. We should not take that 400. Sold inventors to customer on credit, that is 150. It is an liability, so it should be an liability, so it comes under liability, that is 150. The total for this one would be 17,500 plus 150, that is 17,650. 17,650. Then 12,500 plus 150, that is 12,650. She paid interest on loan of rupees 60 rupees. She has paid interest, so we have to deduct that amount. That is, interest on loan is 60 rupees. She's paying, so we have to write in liability side and 60. The amount would be 17,590 and 12,590. She repaid 250 of the loan. She have repaid the amount of loan, that is 250. We have to deduct that one also. Repaid loan, that is 250, and we have to deduct in liabilities also, that is 250. After deducting, we are getting 17,340 and 12,340. And she took rupees 10 from the business bank account to cover the personal expenses. As I said, for the personal, from the bank account, they are, from the business they are taking any amount, that would consider as drawings. We have to deduct this drawings also, that is 10. It is we have to deduct it from liabilities also, that is 10. Then we are getting the total would be 17,330 and 12,330. The liabilities, capital would be 5,000. Let's use in the formula, apply in the formula. That is, assets is equal to liabilities plus capital. That this is, assets is 17,330, liability is 12,330, then capital is 5,000. While adding this liability and capital, we will be getting 17,330. Hence it is proof that it is LHS is equal to RHS. The next problem of the video would be posting shortly in on the basis of accounting equation.